Alright, what's up, y'all? We're back with another video. It's a little late one today. It's right now recording this. It's at 8:34. I've just been busy through the day with a lot of stuff going on, so still had to make this video for you guys today, though. Just a quick update on the LUCID account. So, LUCID actually gave me my funded back. So I don't know if I told you guys on Friday, but on Thursday, TradeAway was kind of tweaking a little bit, and caused me to lose my account. If you guys want to go find the reason why, you guys could look back in the video from Friday. But yeah, so I got an email. They gave me my account back, and then I traded this account today. They gave it to me on Sunday, and then I traded today on Monday. I made $900, so that offset the loss from the Wednesday, which I really did lose. Thursday was kind of iffy day, so I made $900 on the funded, and then on the combine today was just $75. It was basically break even day on the day. Took two trades, ended up losing 5 something and then making 600, right? So still need 2k to or 1k to pass this account, or a little less than 1,000, but it's looking good from there. And again, I'm not copy trading these accounts. I'm looking to copy trade them soon. Just haven't figured out how to set that up yet. So when I figure how to set that up, we're gonna have copy trading both of them. But that's just the showing you the accounts. And then here I did take 4 trades today. Or I actually did take 5. One was kind of like just a quick break-even trade. So we're not going to review that one. And then we're not going to review the exact trades I took today, but we're going to review, the rough areas. And when I say exact, I mean the exact price I entered, right? But it'll be the rough area of where I entered and stuff like that. And then if you guys want to see the trade reviews, not on the YouTube video, I do have a Discord as well where we do live stream, trade reviews, and all that stuff. So we'll just start here today, just kind of what I was looking at. So daily bias, it was bullish, but I'll let you guys know why in a second. Well, we were actually bearish, right? And my assumption is from the news that's going on. You guys have seen in Mexico, now we're fighting Iran and stuff, and then the chart as well, right? So here in the chart, we can kind of confirm this bearish bias as we tap this fair value gap, and we're basically holding it. We basically respected it, right? Let's see if we can inverse it. If we can, then we're gonna look to go long. But other than that, there's not much on the daily. Then we go down to the 4-hour. Here's where stuff starts to get much more intriguing, much more in depth. So firstly, note relative equal highs here for buy side liquidity, as well as we have fair value gaps, external. Another set of relative equal highs. Here we have 1, 2, 3, 4, 5 here. So that one's a very important one to note. And then we do have buy side. This was the first buy side noted. And as you guys can see, well, this is the first one on the 4-hour. And as you guys can see, we did take it, right? Sell side liquidity. And we can mark this one out as well, right? And then we have these equal highs here. I think this one we put in the morning. So now that's a draw for the next day, right? But this was the draw as well, higher, so you guys will see in the lower time frames. Okay, going down to the hourly, same thing, right? Relative equal highs. We did have SMTs. I think it was a bearish SMT. I think S&P took, I think it was Asia highs, and then NASDAQ didn't take Asia highs, something like that, right? We did have a bearish SMT somewhere. But disregarding that, right, we're just going to note that for now. Okay, here on the hourly, we didn't see these candles before. We got to this one first. I did take one trade, one long today this morning, right before market open, and literally in 1 minute at 9:29, right before market open. The reason why I took that was the inversion of this hourly gap. Sweep of these lows, right? 1, 2 relative equal lows swept. We could note this one that has been swept as well. And then inversion, and then we go down to the, I don't need to mark this high. You guys, you know what? I'll mark it for you guys. So here we go. There's that high, right? And you guys can see in a second why that plays an important part. And then we're gonna mark this south side down here too, just for you guys to see. Okay, going on a 15-minute. Alrighty. So first to note, let me go back to the hourly. We have the new week opening gap as well, so that's very important to note. So this is kind of confirmation on one of my trades actually. I mean, change the color, just write down the week opening gap. This is very important to note. New week opening gap is an important level of price. If you guys haven't learned about it, you guys can search it up on YouTube, and then I'm looking to make a video on it as well. It's going to be a quick one, but yeah, we'll have one out as well. So hourly hit the new week opening gap as well as this fair value gap in here. Then we go down to the what time frame was I on before? Hourly 15-minute. Sorry. Yeah, I was right. Okay, hourly, those fair value gaps, inversion. Again, 15-minute tap the new week opening gap. And I'll just let you guys know now, the 1 minute did not hit the new week opening gap. Sorry, the 15-minute did not either. This is the hourly, but it did hit it on the hourly, right? So first thing we note, we have this high here at 4:30 on the 15-minute. This is the sorry, I don't know why I'm tweaking out today. That has to be right. Yeah, that is right. Okay, well, never mind. Forget what I said. London highs here. I don't know why that just happened. I'm probably not going to edit it out, but we'll just keep it in there. Okay, so we have this high in here. London high, 4:30, right? London's between 2 a.m. 5 a.m. That's the important levels of liquidity where we know the highs and lows. So we have this London high here. As you guys can see, we took out the London high before we made what? The big move down, right? And then again, I entered long because the inversion on this 15-minute gap. And then you guys will see on the lower time frames. Let's see on the 5 minutes. Same thing here, right? Inversion of this 5-minute gap. That's what caused me to kind of confirm that entry there. Let me just fix the size of those candles. So we'll scroll over here. And sorry for that noise, guys. I live right next to the busy road, so if you hear noises like that, that's what that is. You guys probably hear cars coming down. But okay, look in here. We have this tap into this 1 minute gap as well. So I entered on this tap. So I entered about, let's say, about right here, right after the tap. In the gap when the next candle opened. Stop loss was right below the fair value gap. I just did the body. And then TP was at this new week opening gap, right? So you could have put first TP at the London highs, second TP at the new week opening gap. And I actually got out of my trade here. So this trade was about $500. And I just told you guys all the reasons why, right? We had the inversion gaps going higher, tap into the 1 minute fair value gap. And then that kind of told me to take this long, right? So it was a nice quick long, $500 off 5 contracts. Then second trade, or the 3 other trades I'm going to do like a quick review on, were all shorts. So first thing to note, sweep of liquidity on London high, right? We took all the buy stops. And then we have the tap into the new week opening gap with the hourly time frame. Keep that in mind. I'm going to have to scroll all the way. But it did not tap in the 1 minute. Just take my word for it, and you guys can look on your chart as well. So there's that. Here's this first resistance gap of the day. This plays an important part, and you guys will know why in a second. So going up to the higher time frames. So I was noting this tap into all these gaps, and I was like, okay, this is a little odd, but we actually did just running through it. And again, inversion of this gap, and as well we have inversion of this gap. And then on the hourly, we actually took out the high, and as you guys can see, we just tapped the new week opening gap and tapped the fair value gap. And then we tapped this little baby gap in here. So that was kind of just more confirmation on that we're going to be bearish for the rest of the move of the day. And then going down the 5 minute is when the better stuff starts happening. So we had this inversion gap on the 5 minute here. And then we have this tap back into it. So let me actually note that on my chart so you guys can see. We're just going to mark it orange. And then we'll just write down 5 IFVG. Okay. So there's that 5 minute inverse gap that we inversed again. You guys could have entered right off the inversion, or you guys could have entered for the tap back in. We did have a fair value gap. And let me note that one for you guys too. We're going to make this one purple. Okay. So, and you know what? Let me write 5 minute FVG. Okay. fig, whatever. Okay, so that 5-minute FEG, and again, it's very, likely, it's not 100%, but it's very likely when we have inversion gap and fair value gap in the same area, we're actually going to hit that price. And as you guys can see, right, 5-minute fair value gap with the purple box, inversion gap on the 5-minute with that box. What does this candle here at 950 do? Perfect tap right here. So that was kind of telling me again, we're going to go down, and I did enter somewhere in there as well. So you guys will see in a second. Scrolling over. So for the shorts, again, sweep of London high, inversion gaps on the higher time frames, tapping into the new week opening gap. And again, very light tap, but we did tap into the new week opening gap. First short I took was in here, right at the beginning. Stop loss was set at like 250 stop loss. I think it was like right about here. TP was full target. I wanted to hit this price in here, but I didn't like how price, was reacting in here, so I got out at about this price right around here. I think it was 73-ish. Yeah, 73. So still, again, 2-to-1 ratio. I think this was about, I don't know, $300, $350. So there was that trade, and then I did take a short in here, and it was like $30. So that's what got me up to 900. And then again, this short was because we had this inversion of this gap somewhere in here. Yep, inversion of this gap, market structure shift below this low in here, super liquidity, tap into the new week opening gap, as well as strong displacement down, and then tap into this gap, right? So I know I said that really fast, but it's kind of like the checklist I'm looking for, and all the confluences worked well together. So there was that. And then second short I took was actually on the combine. I entered on this down move here right before the inversion, so I tried to front run the gap, and then as you guys can see, stop loss was right there, and as you guys can see, we did get stopped out. That was for about 500, and then TP was going to be there. The reason why I entered short on this trade was because of this tap into the first presented gap, which I mentioned earlier. This is why this is important. First presented gap always is an important price level of the day. So here is that first one. And then as you guys can see, we did tap into it with the 5-minute IFEG that was there as well. So you could have put your entry right here. You could have put in the first presented gap of the day. And then after I noted that tap into the gap and the inversion of this 1-minute gap, then I did take another short. So for that short there that I got stopped out on, it was a good trade. Stop loss was a little tight, in which I did end up getting stopped out. So not always a problem, right? We're already up like $900 on the funded, so we lost $500 on this trade. But again, entered because we already had the previous things I noted. Sweep liquidity, London high, tap into the new week opening gap on the hourly, strong displacement down, market structure shift, and then we had this tap into this first presented gap as well as the 5-minute fair value gap and the IFEG. So there's that trade that I got stopped out on. Then again, I entered again on the combine. I entered right at the inversion, so after this candle inversed, or sorry, it was somewhere in here. I did not, catch this move up. I know that for a fact. I would definitely remember being down. But I entered somewhere in here towards like these down close candles, and again, stop loss right above the inverse fair value gap, and then TP at this low here at 806. And this, again, why are we marking this out? Our chart would look like, I don't have replay on this, but something like that, right? We would not have taken the lows, and that's why market moves to take out those highs and the lows. So that's where we noted for the TP. I did not end up taking full TP here. I ended up taking TP at $600. I ended up getting out. It was somewhere around here. I think it was right after we took the slow I got out. This was for about $600, and then if I did hold, I still would have been in the trade. This would have been about 1,500 TP, so I would have passed the account. But again, right, I can't complain. I got myself back to break even and actually ended up making $75. So people don't even make that hourly, so we can't complain about that, right? So again, right, tap into the first presented inversion of this gap, tap back into it as well, and then we have the strong move down, right? So that was kind of the 4 trades I took of the day. After that, I was just watching price to see if we would take this low. And again, we did. And then we did take this other important low at 677. And again, you guys could enter, right? on this short here after the inversion on the 5 minute. You guys could enter it on the tap on the first presented gap and the 5 minute fair value gap. If you want a wide stop and you're okay with it, this first gap that's here, and then stop loss right above the high, right? And then again, inversion of this gap as well, and then tapping into this gap, right? There's so many ways to enter today. Today was actually a really good day. It was just straight algorithm, and as you guys can see, it was a really amazing day. And then we did have draws lower, right? So that's pretty much a good day. And a quick note, first presented gap, why is this the first presented gap and not this one? Because right, they're both fair value gaps, and this was sooner. This one was just immediately after, and it's a much more, like, as you guys can see, like extravagant, I guess. It's a much bigger fair value gap, so it's more like wow in your face. And when you notice, right, you get moves like this, the bigger one like this is most of the time going to be the first presented gap. So that's why I noted this one to be first presented and not this one. So yeah, that was pretty much the trades for the day. Quick review. I was wrong on the bias, flipped the bias, and actually ended up making good money off of that. So can't complain today. Again, I'll just show you the profits. $75 on the combine, 918 left to pass, and then 905 on the funded. So overall, good trading day. Tomorrow, I don't think there is news, or there might be news. Yeah, there's one red folder news, FOMC members. So, right, we're gonna have to wait and see what happens with that. So, other than that, decent trading day. If you guys learned anything, valuable from this YouTube video, don't forget to leave a like, comment, subscribe, whatever. Right? If you guys want to learn anything more, trade recaps, see some live streams. We have a great Discord community if you guys would like to join. So. Link that in the description for you guys. And then if you guys want to see anything, have any questions, don't forget to leave a comment. And I'll see you guys on Wednesday if I can find this thing. Okay, see you guys on Wednesday. Peace.